The Bitcoin Group, the American original. For over the last 10 seconds, the sharpest Satoshis, the best Bitcoins, the hardest cryptocurrency talk. We'd like to welcome our panelists, Dan Eve, the Crypto Raptor.
Greetings, folks.
Josh Shigala from the Standard.io.
Hey, folks.
And I'm Thomas Hunt from the World Crypto Network. Moving on to issue one. Issue one, Bitcoin defies bad tidings to register its best week since 2021. The biggest digital currency is up more than 11% so far this week, and there's open interest in Bitcoin futures on the CME. It's increasing. Dan Eve, what do you think about Bitcoin's best week since 2021?
Well, I'm not going to lie. I'm disappointed because I was kind of hoping it would just keep on going down so I could help the dollar cost averaging. But it's obviously it's good news for the industry, showing how Bitcoin is a bit has been or is resilient in all these turbulent times, all this infighting we've got going on with Genesis and Gemini and the FTX collapse and all these other companies that are feeling the brunt of the bear market. So it's always a nice thing to see Bitcoin's price going up. Even if you don't own any, you're happy to kind of see it go up. Unless you're one of those miserable folks who just always wants to see it go down. But no, ultimately, we're still not through this bear market. I don't think. We're still over 12 months away from just over 12 months away, right? About 14 months away from the March 2024 halvening. So in theory, things should start to kind of pick up around about now. Historically, January hasn't been the best month for Bitcoin though. So this may be a kind of, is it a dead cat bounce, as they say in the triangle trading world? Where it kind of I don't know, but something like that. Anyway, I don't know the terminology. It's all astrology to me. So yeah, I don't know if the triangle is in the sign of Taurus, then Bitcoin will go up, and if it's not, it goes down, and all of that Grim Fandango stuff. But nobody really knows. So just ignore the price and focus on the cool stuff that's happening.
Of course, it comes from the old saying, even a dead cat could bounce. Even a dead cat. So a very bad stock could bounce like a dead cat. Josh Shigala, is that what this is? Or is this, as Dan mentioned, the Bitcoin halvening already starting to have an effect?
Yeah, I mean, I don't think this is a dead cat bounce, because dead cat bounces usually happen after a really shocking decrease, like a very fast decrease, and then it'll bounce. This has been sort of fluffy and I mean, of course, the FTX news did render a massive downplay in the market, which then caused a little bit of a just basically not even a dead cat bounce. It was just sort of moving sideways for the last sort of whatever it's been now, a month and a half, 2 months. So, but I feel that the market was already heading into springtime at just before the FTX collapse. So we were looking at winter was sort of starting to thaw out, which was a long crypto winter. But generally, what happens, the higher the market, the longer the crypto winters. So, and this is kind of what's happened historically. We've seen a market pump. It's then gone sideways, it pumps higher next time, sideways is longer, higher next time, sideways longer. And so that correlation is, I think, happened as well. And just before the FTX collapse, we saw the spring coming, and now the spring is starting to take off again. I feel that the whole halvening stuff is kind of priced in, should be anyway, because we know what Bitcoin's worth. In terms of how many there are, sorry, not what it's worth, but we know how many there will be already. So yeah, I just think we're heading. All the weak hands have left the building. Basically, that's what it comes down to. Over that long period, anyone that's weak enough has left, and now we're buying.
The question is, does everyone know about the halvening? Certainly we know about the halvening, but maybe not everyone. Now it's your chance. Even you at home can play in the chat. Predict against the greatest predictor in all time of all of Bitcoin, the Bitcoin predictor ball. I believe said it was going to be higher last week. Dan, are you going to go with higher or lower this time
I'm
next week?
stubbornly sticking with lower.
Dan Eve sticks with lower. Josh Shigala, also pessimistic.
No, I think we're on a little bit of a rally. We'll see a higher one next week.
And here we are shaking the Bitcoin predictor ball. Will the price of Bitcoin be higher this time next week? My sources say no. My sources say no. The ball is pessimistic. Joining in with Josh Shigala. Moving on to issue 2. Crypto firms Genesis and Gemini charged by the SEC with selling unregistered securities. That's right. Also more Gemini and Genesis trouble in the news. Why the Winklevoss brothers are in a $900 million crypto face-off with Barry Silbert. It seems like the Gemini exchange, owned by the Winklevoss twins, remember Gemini means twins, had a product called Earn, where you could invest your money. Your money would then be given out to Genesis, different company owned by DCG. Genesis then gave your money out to FTX. And you know what happened next? FTX lost the money in some kind of a dumpster fire. And now Genesis and Gemini and DCG, the Winklevoss and Barry Silbert are all in complete free fall. They're saying that Silbert might even break up the digital currency group, selling it off in parts. A massive fall, a sudden collapse. Josh Shigala, what do you think about the Gemini, Genesis, Winklevoss, Silbert, DCG nightmare?
Yeah, I mean, I think this is the contagion that people were looking for directly after the FTX. I had a feeling it would take a long time to shake out some of this contagion as people cover their positions and try to hide some of the damage. And this is what the legacy banking world does all the time. People talk about crypto exchanges getting hacked, but actually banks get hacked all the time. And basically they just sweep it under the rug and hide it and cover it with insurances. But this is the whole reason, and people need to look at this stuff. And I know that there are a lot of people that call everything a shitcoin that's not Bitcoin, but we need to head towards more DeFi. This is typical CeFi crap that the cypherpunks wanted to get away from. We're trusting these centralized units to lend out. Look at it all. One company lends to another company that lends to another company, and every middleman takes a cut, and every middleman is another trust factor. It's nonsense. It's total nonsense. It's disgusting, and it needs to stop. And this is what we built Bitcoin for. This is what we have cryptographic currency for. And that's the beauty of decentralized finance protocols. You know, the main ones being right now on Ethereum, but this is what we need to do. The problem with CeFi is that you can have as many, you know, transparency protocols like we have at Vaultoro with the Glassbooks protocol, or like the Kraken has using Peter Todd and Gregory Maxwell's transparency protocols, but they cannot show you liabilities. So if you have thousands of Bitcoin sitting on your balance sheet and you make a secret contract with someone to use that as leverage for getting, you know, more furniture in your office, you cannot show that cryptographically. So DeFi does allow you to prove everything cryptographically because it's all based on smart contracts. Look, smart contracts are also not infallible. You know, they can be hacked and stuff. So there's no panacea, but this human corruption is what we're stepping away from. Now, the spaghetti that's coming out of the FTX collapse is going to be huge. Barry Silbert, I do believe that the digital currency group is far too powerful in this space. They have Coinbase, they have a whole bunch of key players under that umbrella. And so being able to break that up through, hey, greed, and this is what's beautiful about capitalism, it actually greed causes people to risk things, and then that doesn't work every time. And so we're hopefully the silver lining of this might be that there's more decentralization in some of these key infrastructure points.
Well, and Josh, I'm sure you remember this. Remember when DCG used all that power and tried to take over Bitcoin? We'd have the whole Bitcoin fight, and they wanted to do Bitcoin 2x, where they would double the block reward after the fight. It didn't seem like it was needed, but they had this little New York agreement, and a lot of that was centered around Barry Silbert and the digital currency group. And even the earlier fight with Bitcoin and the blocks seemed like it was a lot about Brian Armstrong and other people who wished that they could control the Bitcoin protocol, to say, hey, my business needs big blocks, or my business needs small blocks. And they could pick up the phone, call the programmer on the phone and say, hey, do this. And of course, we know you can't do that with Bitcoin. So it probably is good for the Bitcoin ecosystem if someone can't try a takeover like this. Josh, what did you think of the DCG Bitcoin 2x debacle?
Yeah, I mean, look, open transparency there. I also signed the 2x thing under as Voltoro, purely because there was a stalemate. No one wanted to move forward. We had the big blockers wanting big blocks. We had the small blockers just wanting to hold the line. And basically, it wasn't allowing the small blockers to initiate SegWit to allow us to move forward. And the big blockers didn't allow them to move forward. So there was a stalemate. No one was budging. So the 2x was a way for us to go, okay, let's have a compromise. Let's lift the blocks by twice as much, the block size limit, and then we can also have SegWit. Yay, done. The thing was that I reversed that signature once Bitcoin Cash had forked off. Then I said, we don't need it anymore. And I removed my signature from that list, because the big blockers now had the experiment of going with big blocks, and Bitcoin could actually go and move forward and put SegWit in. We'd remove that stalemate. So I do agree with you, though, that large companies being able to sway programmers is a bit sketchy. The thing is about Bitcoin, and the beautiful thing about Bitcoin and its architecture, it doesn't matter what the programmers do. The programmers could have done what Barry wanted and what we signed for. It's the people holding all the nodes and all the miners would have to upgrade to that software. And that's a lot harder to do, to convince all of those people to do what you want as a single business, as a business that has a lot of infrastructure.
Well, obviously, full disclosure here, I used to work at Purse.io, which was a DCG portfolio company. I only got to meet Barry one time at an incredible Napa wine retreat. I also met the guy who was running Genesis Trading at the time. He was a huge Mad Bitcoins fan, so it was very cool. The Genesis Trading guy. I've always admired Barry for what I thought was correct investing. I felt if I had been in his shoes to build a portfolio to invest in Coinbase and Purse, Kraken, so many other early Bitcoin companies, and to support them and really give us that ecosystem, that infrastructure that we needed to get Bitcoin out to more people. I thought that was awesome. I also thought the Winklevoss, although I think it was more envy, it was impressive that they had the money to buy Bitcoin with at the time, and they made a huge investment into Bitcoin. Both of these things should have taken care of both of these groups forever. But I think that it was too much greed. They saw the ability to get those returns on FTX. They cycled them through Genesis, they cycled them through Gemini, and they offered huge returns for the earn program, just like we've seen with these other programs going down after they take on the lending. Dan, Eve, what do you think about DCG and their battle with Gemini?
Well, it really is a battle of the giants, right? They're two long-standing Bitcoin, Bitcoin advocates. And there's some interesting things about this case that and the Winklevoss twins are kind of blaming they're kind of blaming Gemini Genesis on this, but also, and they said things like what was it? Those funds belong to customers including a school teacher, a police officer, and a single mom who lent her son's education money to you. Well, don't lend your education money out to a random company that I know it's a bad mistake to be made, right? Like, it's a risky thing to give it to a cryptocurrency company that's going to be lending it out to someone else. But for them to blame Gemini, God, the two G's, it's the GEs, Genesis for it. They've got to take responsibility themselves. And the fact is that they maybe should have spread their risk and not, as you said, been so greedy about the whole thing. But the what happens in the normal markets when there's a recession is that a lot of people tend to default on their loans, right? If the wages, the costs outstrip the wages, then people default on loans, and in a bear market, you should be more prepared, and you'd think that these guys would be a bit more prepared for people defaulting on their loans and these sorts of issues. It said that the $1 billion that Barry Silbert was meant to have loaned Genesis in order to kind of make up for the funds was essentially a 10-year kind of IOU, which didn't really make much difference. So they're obviously understandably a bit pissed by that, because of the fact that they thought the situation was a bit more secure than it was. But ultimately, we go back to this time and time again. But if you've got your Bitcoin, you're giving your Bitcoin out to someone else, then you've got to be prepared for it to be lost, because that's what's happened in the real world. And cryptocurrency makes it, and especially where dare I say it, where it's unregulated, there are less protections in place. The government's not going to bail out like Gemini, for example, or Genesis, which they will do a normal bank. So you've actually weirdly got normal protection in a normal bank, but people are chasing they were chasing the APYs, right? They wanted the big gains. They wanted the 20% that like Voyager were earning, and they weren't prepared they didn't really think about the risk that comes associated with giving your money to someone else. And it goes back again to Trace Mayer and the issues with rehypothecation, where the money someone gives the money to someone else, who gives it to someone else, who gives it to someone else, who gives it to someone else, and then there's just a chain of unhappy people at the end of it, where both FTX and 3 Arrows Capital stuffed it, and then as a result Gemini stuffed it, and then as a result Genesis stuffed it. So and then the customers of Gemini did. So it's a sad chain of events, but not your keys, not your coins. And sometimes, especially with Bitcoin, if you think about it, you're holding Bitcoin because ultimately, obviously, it's sound money, but you're holding it because, let's face it, you think it's going to appreciate over the long term. So just be happy with the fact that your Bitcoin is going to appreciate over an X year period, and don't try and give it to someone who's going to give you more, because all it's seeming like now is that all these companies that say they can give you an interest rate that's really high are just as bad as give me 1 Ethereum and I'll give you 2 Ethereum scams, or give me 1 Bitcoin and I'll send you 2 Bitcoin back scams, and I'm not calling them scams, but they're not very reliable. So they're kind of seeming, like they're on the same reliability level as these scams.
Go ahead, Josh, more on this.
I don't buy the fact that they didn't think about what the other company was doing. Like at Vaultoro.com, we have never lent out customer funds to anybody because it's just too risky. It's just too risky. And if we were to offer a product to say, hey, our clients, let us invest your stuff for you, our company, Vaultoro.com, if we were to do that, which we probably wouldn't, but if that was an option, man, would we want to know exactly what the company's doing that we're doing. How are you exactly getting the API that you're getting? And either they say contractually, we do X, Y, Z, and we sign off on that, or we don't. Now, if the company that we're lending it out say, well, we're lending it out to another company, then that's just already like gaga land. And there are ways to earn an APY that are fairly risk-free. They're not risk-free. There's nothing risk-free but risk minimized, and that's over collateralization. Again, that's the DeFi mechanism rather than the CeFi mechanism, which always goes for like, hey, we could get more people borrowing if we just don't need so much collateral from them. And this is that you know, a little bit of bait at the end of the hook that's going to get you. But yeah, I don't buy the fact. I think this, obviously, if you're a CEO and you've got mad customers at you, at your neck, you have to shift the blame. But at the end of the day, all of these companies are to blame. There's no one they can point their finger at and go, they're the ones that are at fault. No. They're all at fault here because they're all playing with shenanigans. They're not dumb people. They do their due diligence and they decided that it was good enough. That's my take.
It's interesting, Josh, because there's faults at every level of the chain, right? It starts off, you've got Gemini. They want to offer this earn product, but they don't know how to get the money for the earn. So in a total custody disaster, they take the funds and they give them to Genesis. Now, in the past, I believe that Genesis used to do this kind of stuff in-house and that they would trade, I don't know, altcoins, derivatives, futures, you know, magical potions and quantitative analysis, and they would get back these returns. Now, I don't know what happened. I have no inside information from these companies. I don't know anybody that works there. But it seems to me something happened and Genesis decided instead of them investing the money, they should give the money to FTX. Now, maybe FTX has a bigger ball to roll. And if you're rolling through whatever this investment is, you have a big enough snowball. It's a lot better. It's a lot easier. Whatever it is, a decision's made and this becomes a 3-company deal. And that's where I think it starts to shift out of control because now everyone needs a cut of this money. There needs to be such a large return that each one of these companies can profit and still be fine. And the end user gets to profit too. It just seems like a lot of imaginary profit to pull out of one system. And I know Barry and others have blamed it. It's because of the criminal element. And it's because of, you know, basically saying it without saying it, of Sam. And it seems to me there's a lot more than just Sam at stake here. There's way too much profit to get out of one system. But Dan?
I like the fact that they're also like having a go at the SEC, saying like saying that it's totally counterproductive to be following up on us for selling securities that we were clearly very much selling, you know, with these high yield products. But ultimately, the people making money don't want regulation. People losing money want regulation. So there's this constant battle, and the more people that get burned by this chain of companies, you know, it was just the FTX company, well, say just the FTX customers, but obviously there was, you know, BlockFi, Voyager, Celsius, 3 Arrow Capital, then Gemini now, and Genesis and FTX, Alameda. You know, as these grow, there's going to be more of a call for regulation. So these big companies operating the way they do are bringing the regulation upon us by not acting in a sensible manner and hedging their risks properly and being so blasé about holding people's cash. I mean, I couldn't imagine what it's like to actually run one of these companies, because if someone gives me £10, like they lend me £10, and until I pay back that £10 debt, I'm like, oh my God, I owe them £10. I've got to pay them back, you know. And at one point, I during the bull run of 2017, someone gave me some coins that were ended up being worth a lot, put it that way, a lot more money than I'd ever known. And I couldn't, and I was like, I need to give you your tokens back. Like, why am I holding them for you? It's the worst thing ever. But these people that have run these companies where they hold other people's money, they're just so blasé about it. They're just, let's just shove it here and shove it there, and who really cares? And I'm sure it wasn't just like that, but ultimately, a lot of people could have seen this coming a mile off, especially, you know, it's the whole thing of you don't put all your eggs in one basket. And it seems they were very much not over leveraged, but they're very much overburdened by this failure of Genesis to pay the funds back. So, you know, these are basic principles of risk management that you'd think companies like this would have implemented. But now, you know, things have failed, so they're asking for Silbert to be, you know, to step down or to be removed from the board, and they're angry at the SEC, the Winklevoss twins, and everything's chaotic. but Bitcoin price is still up. So it's still pretty resilient.
Could you imagine being in the Winklevoss control center and everything's going bad and there's no money, and then you get a phone call, it's like, oh, the SEC is investigating you now. It's just when things go wrong, they just go so wrong. And like Dan said, the price of Bitcoin looks like it might recover. Who knows? Maybe the Winklevoss could have just held on to their coins and done nothing at all. Exit question: predict the future. Will they break up the digital currency group, and will it be a surprise good thing for Bitcoin? Dan Eve.
I don't know if it'll break up. You know, it might be resilient and weather the storm. You know, Silbert, although he's been into shitcoins, has been a big Bitcoin advocate from the start. So you'd hope that he's not too exposed to the shitcoinery that's gone on, and they're stacking a lot of actual Bitcoin. There could be another kind of, although I was going to say there could be another, not silver lining, but a positive that comes along down the line, which is, are we still waiting for a spot ETF decision? Although that's probably out the window now, isn't it? Because who are the two biggest campaigners? Weren't they Genesis and Gemini? Yeah, that may not go down so well. But again, ultimately, I'd prefer it if it would be better for the ecosystem if these companies didn't fall, because even though they're nothing to do with Bitcoin, it would be good if people could give some of that money back. And the fact is that any negative connotations relating to companies that trade Bitcoin, is bad for the adoption of Bitcoin. I hope everyone sorts it out and they all kiss and make up and they recover money and everyone's friends again and Bitcoin goes to the moon.
Josh Shigala.
There's an old trope in Bitcoin that says, oh, this is actually good for Bitcoin. Whenever there was a huge calamity, there'd be someone in Bitcoin Talk forums or on the Reddit subreddit saying, hey, this is actually really good for Bitcoin. So I'm going to go with that old trope.
I'm going to agree with Josh. I think they will break up the digital currency group. I think it'll be good for Bitcoin, but special bonus prediction, bad for CoinDesk. CoinDesk, the company that helped kick off the FTX disaster by exposing it, ruined their parent company DCG, and will probably be sold off to someone who wants to take their reliability and their reputation and use it for commercial purposes. CoinDesk will be a shadow of itself in the future. Check out worldcryptonetwork.com, where we've got videos by topic. Yes, we've got tons and tons of topics, maybe even 1,700 of them. You could click on any of them to check out the videos that we did. Here's one about the Satoshi Roundtable. We can go back. Here's one about the Bank of England. Look, 3 videos about the Bank of England. You can click them all right here at worldcryptonetwork.com. We've also got an update in the side standings. Dan Eve is chasing Tone Vase for the most appearances on the show, and Joshua Shigala has passed Jimmy Song for the most appearances on the show. Moving on to issue 3, FTX liquidators lost $74,000 in wrapped Bitcoin in an embarrassing on-chain faux pas. Something about some strange coin that they moved, and they had to have the capital there. They moved the capital away, and the loan of the strange coin was taken away from them, costing them 4 wrapped Bitcoins. Meanwhile, the major media wants to know who guaranteed Sam Bankman-Fried's $250 million bond. As we all said, the parent's house was worth a few million. Throw in the aunt's house, maybe a couple more million. That's not 25 million. That's not 10% of 250 million. Who put the money up? They say that they can't tell us because they didn't tell us about Ghislaine Maxwell, and they were sex crimes in that case, but this is a financial crimes case. Josh Shigala, what do you think about FTX, the lost money, and now the questionable bond?
Look, it's really hard to speculate on this one, but it is very suspect with all his political connections on both sides of the aisle, more publicized on the Democratic side. and because they're in power, I guess there would be more push there because they are in power. But yeah, I don't know. I don't know what to say about it. It is suspect, and it needs investigation.
It is unfortunate when things like this seem to feed the conspiracy theories around things. Of course, we all know he gave money to Democrats and Republicans, so both parties could actually want to keep him out of jail, want to keep him out of trouble. And it's very curious as well. They say the reason they're not telling us who put up the bond is because they could get bad press, the way the parents and everyone else involved in this has gotten bad press. Well, maybe they should get bad press. Why are we protecting them? I thought this was some kind of egalitarian American system, right? Dan, Eve, they're not telling us who took the bond, but they sure did lose the money. What do you think of FTX this week?
No, I think I'm with Josh. I think that the politics part, where he was such a big donator, in general, to both Democrats and Republicans, mean that there's probably a lot of people that want to hide their involvement, and that maybe they said that they were going to pull strings for FTX, and now that Sam Bankman-Fried's going down, he needed some strings pulled, otherwise he can release some information. That could be a conspiracy theory in itself, but I think it's entirely logical that's how unfortunately the kind of lobbying system works, right? You pay the money, you get the favors, the secret favors or whatever. But I think ultimately it's in the public's interest. Like, it's a different. I mean, not the crazy redactions in the Epstein thing weren't in the public's interest, because I still think it's an insane thing that one lady's gone down for this huge sex trafficking operation, and not a single dude who was sex trafficked to it. That's all a bit crazy. Like, how hasn't that happened? But protecting people, I mean, you think about the number of people that have been affected by FTX and who deserve to know, like, who's funding this thing, right? Like, I don't know how it's made. I don't know how it's hidden. Like, it's basically hidden from the public. I think it's crazy. There's obviously weird stuff that's come out since, like he visited the White House and to advise on COVID-19, like, weirdly, September or something. They were like, oh yeah, it was visited about COVID. He visited about COVID-19, even though he's obviously not a doctor. But the funniness that's happening with the funds from Alameda being sort of swished around as well, people liquidating and not really knowing what they're doing. There was one that said that they sent 60 cents worth of DAI and 2 cents worth of collar token, which obviously on Ethereum, 2 cents would have been, far less of a token. It was far less than the fee to send it to the multi-sig, but they still had 1.5 million of funds that have yet to be moved. So it seems like a bit of a headless chicken running around, or a group of headless chickens running around trying to sort the mess out. Although they did have a big win, which was announcing that they've recovered 5 billion worth of assets. So that's some kind of silver lining, I suppose. But they're really, Alameda in general, and FTX, the Liquidators, they're all checking under the sofa cushions, trying to find that little bit of spare change here and there. But going back, ultimately, the people should know. The people should know. It's definitely in the public interest about who is fronting the money to defend a guy who has defrauded hundreds of thousands of people. It's like, of course, that's in the public interest.
Well, and who's left to be this guy's friend? Certainly we understand his parents putting their house up, his aunt, maybe some family friends, but who has the big heavy pockets who didn't get destroyed in this? Everyone who put their money in got destroyed. All the investors, all the people who did advertising for them, all the big names, they all had money in this. They all got taken down. There's one of them out there. I don't know who he is, but he's still a fan of Sam. Maybe it's Mr. Wonderful. Maybe he has all that money and he just funded the bail. And again, he's a public figure. There's no reason to withhold this information. I disagree with the court very much. I think that they should expose the information, and if there is negative damages, you should accept them. You're bailing out a negative person. Like, this is a person, like Dan said, who scammed lots of people, all the insurance funds, all the pension funds, all the retirement funds. He shouldn't really be out on bail. Go ahead, Josh.
Wait, you know, there is still innocent till proven guilty, and you know, even though there's a very, very minimal, tiny chance that that might be right, that is still there. And so the court system is there for a reason, and the bail system's there for a reason too. And he has pleaded not guilty and said he was just bad at business. So you know, but nevertheless, so that's why I like to put the allegedly in there, because we don't want to be liable for just saying this, that he has defrauded, because it's still, you know, hasn't been sealed and delivered. But there is definitely a lot of questions about this bail. What I don't understand is, even for a billionaire, 250 million isn't chump change. If you lose that because he's found guilty, and that's the, I'm not sure about American, correct me if I'm...
You would mainly lose it if he ran. This is mainly about him not running. And there, I do agree, Josh, he is innocent until proven guilty. But it just seems that there'd be a little bit of respite for the people who have lost their money, that the person who's running the company would be spending the holidays in jail rather than, as we know from a recent interview, playing video games at home. Like he doesn't, it's not punishment, it's jail. It's bad. It's a bad place, certainly. But if he was in the bad place, people would be saying, well, the system's working, you know, it's grinding in the right direction. But this mystery billionaire or whoever has come along and has taken that small bit of respite away from these people.
Well, I have to also say here, I don't, like you said, there's not many friends left. And let's twist it around a little bit. Even the parents' house has been bought with customers' funds. There's no way that Sam, with these could have earned as much as he did to sort of front this up. So he's using customer funds right now to bail himself out. He's just continuing the alleged scam, and
allegedly continuing the alleged scam.
He's allegedly continuing the alleged scam by actually using customer funds who bought the property. And then I think it's not outside of the world of imagination to think that he's also using customer funds piped through multiple different corners to then put up the bail. So yeah, it's very sketchy. It would be it definitely should come out. The court should release that information.
It is amazing when you decide to break the law or allegedly break the law, you can gain all this power that you can then use to defend yourself against the law. Other people should have known this, people like the alleged Dread Pirate Roberts, who seemingly didn't put anything away for his legal defense. Like Josh is saying, for all we know, and again, we have no information on this, this is speculation, Sam could have put money in this account, in that account, Bitcoin in this account, given it to this person, given it to that person, whatever it is. It's very possible the money bailing him out is customer funds. And like Josh saying, I was thinking about more, I was like, every laptop he has, every computer he has, every bag, every little piece of clothing and things that he has is essentially all stolen customer funds because of how horribly he ran his business. Dan, do you have more on this?
Yeah, and the sad thing is that that even without the pilfering, well, not pilfering, but the recovery of funds for Alameda and FTX, you know, they're using mixing services to try and obfuscate where the funds are going. And there's no doubt, I mean, I don't doubt for a minute that when SBF, you know, he didn't have his own kind of little insurance addresses where he was rinsing funds to maybe some sub companies. And he's, you know, he's got, although he, you know, he kept on saying, I've only got 100K. When you repeat something 20 times, you're like one of those duping delight, and you're smiling about it. You're like one of the duping delight. If you're into murder mystery porn, you know, those kind of documentaries where they're like, you know, they talk about the killer sort of doing interviews on TV whilst the dead body, like knowing where the dead body is and being like, oh, I'm really sad, but we need to find the people who did this, and blah blah blah. You know, the duping delight things, the repetition of certain things is because they're lying about it. And I just don't believe that he hasn't got an absolute shed ton of cash in all these different addresses which has been kind of slowly pilfered out throughout the years of FTX. That's not the reason that is the money that's being used to prop up the case, and the reason why they want the identities remaining hidden, because the more people look into it, the more they might be able to trace the money back to SBF himself.
Well, and another great part about that alleged possible lie is he could be telling the truth, where it's, I only have 100K in my bank account, but in my Bitcoin address that's hidden, I have $1 billion, and I have Litecoin, and I have Doge, and I have whatever else. He could be telling the truth, but not actually telling the truth and answering the full question. Let's move on to the exit question. Josh Shigala, at the end of the day, what will happen? Will we ever find out who financed FTX's bail, SBF's bail?
I think there's too many powerful interests at play. I don't think we'll find out. No.
Dan, Eve, will we ever find out who financed the bail?
I'm confident that there's going to be enough people who want to leak that information that we will find out, and enough internet sleuths to somehow trace those funds.
I agree with Dan. I think eventually it will come out. It's not what they want to happen, but it does seem to be what eventually happens. Maybe it'll be an old friend of the family who just happened to have the money in an account, or Mr. Wonderful is still my pick, Kevin O'Leary. Moving on to issue 3. Issue 3, Mark Cuban predicts, or issue 4, I think. Mark Cuban predicts this will be the next possible implosion in crypto. Here's how to avoid it. Yes, Mark Cuban used to be into ICOs and altcoins and all kinds of fun stuff, and said that Bitcoin wasn't serious. Now he's back. He's into Bitcoin again, and he's here to fix it. He says the problem with Bitcoin is wash trading on the central exchanges. As everyone knows, a wash trade is when a trader buys and sells the same financial assets multiple times in order to generate fake volume and make it appear as if there's a high demand for the asset. This artificially inflated demand can mislead other traders into investing real money into the asset. Dan, Eve, Mark Cuban's worried about this for Bitcoin, but it sounds more like a problem for altcoins, ICOs, and maybe even NFTs. Dan, what do you think about Mark Cuban and wash trading?
Well, I think there's still, every now and then, there's still wash trading stories are quite, they are out there. They're just washed away, as it were, drowned out by all the stories of FTX and all the drama and the polycules and all of these other crazy stories of companies collapsing. So it's in an exchange's best interests to kind of prove that they don't wash trade, and often you find these stories somehow wash trading at one exchange leads back to research done by another exchange. So that's they've got vested interest, right, in dobbling each other in and grassing on each other. I think the thing is with going back to what Josh was saying earlier about the hate on it, but the smart contract infrastructure that allows a much more transparent order book, where on a traditional exchange, from my experience, and I used to on when I was looking into shitcoins back in the day, there were coins that were, the daily volume was 100 times the actual entire order book on the exchange of both buys and sells, and it's clearly wash traded, and you couldn't see these trades happening live. And you could probably still go to an exchange right now and see some of these trades just happening without a matching order on there, just magicked out of the blue. But ultimately, both, not just exchanges, but the actual shitcoins themselves that are listed on these exchanges have a reason to want to wash trade and show volume, because the volume shows the demand for the coin, right? So they pay market makers to market makers who literally just buy and sell from each other, sometimes extraordinarily obviously, by using the same amount traded every 5 minutes, so that you have a complete flat line of volume rather than an actual realistic chart of volume, because they've been faking their own volume. Whereas in DEXs, it's a lot more obvious, and they on a centralized exchange, the shit coin can negotiate and not pay not pay fees because they're, you know, on their own trades. But on a DEX, you have to pay fees to the actual DEX. So wash trading becomes a lot more costly for people on a DEX. Also, it's more obvious if you're doing so because it's easier to trace where the coins are buying, the buying and selling of coins is coming from. So I think more transparency is good ultimately, and we're going to get that not from centralized exchanges but from DEXs.
Well, as we saw in the past with the Mt. Gox attacks, there was the Willy bot and the other bot that were trading, and they were supposedly market making, but it's so much easier to make the market when you don't have to pay any fees. And I do love the idea of Cuban this late to Bitcoin and cryptocurrency, coming in like the character out of Casablanca. He's just like, I am shocked that there is wash trading going on in this cryptocurrency exchange. Josh Segala, should Cuban be so shocked? Is he going to fix it all?
No, and this is exactly right. These sort of these legacy financial talking heads who are all of a sudden at all these crypto events as experts is a joke. And we've said it before on the show that it's kind of annoying for people like us who have been in the space forever and really have a very minutiaed and fine grain understanding of what happens and the personalities behind them. But yeah, wash trading is one of these things that is, you know, in one way, yes, it does show liquidity. You sort of can pretend you're more liquid than you are, but actually it's can be used to drive up the price for coins as well. And so if you're the exchange, you want to do it to basically show liquidity, but you might also want to do it to drive up a coin and then short it as it dumps back down and stuff like that. That is harder to do now because of arbitrage opportunities between exchanges. So you need a vast amount of volume to have that happen. But you know what? One of the things that's really coming out of all of this is really wash rugs. That's kind of what I'm calling it now. Is that there's a lot of these altcoins they're wash trading it to drive the price up, and then they rug pull it, and that's really one of the most awful parts of the crypto space for unsuspecting investors. And so, again, exactly what Dan said. DEXs solve this because it's very, very expensive to wash trade on DEXs. Plus, there's no real need for it because you can see the liquidity in the liquidity pools. We've gone away from order books and we've gone more to pools, so we can see exactly how much liquidity is in a pool. It has to be there. It's provable. If there's any weird shenanigans, it can be spotted pretty quickly. Yeah, the future is cypherpunk. The future is DEXs.
I agree, Josh. It is interesting to see that the mainstream media prefers to use old experts and people who have made their money in the old world instead of bringing in new crypto experts that might actually understand what they're talking about. And it's not just the media, it's also the people. I went to that Web3 conference a couple of months ago in Las Vegas, and Mr. Wonderful was one of the major announced speakers, and he was on this panel and that panel, and he made a speech here and he promoted his company here. And in between those speeches, he'd go down the hall and people would all follow him like he had all the answers. And they're like, oh, Mr. Wonderful from Shark Tank, from TV is finally here to tell us about crypto. And like a week later, the FTX story came out. He's totally wrecked. His reputation is ruined. It's all over. And I don't think he should have ever been there in the first place. Remember, he testified before Congress and said that FTX's business competitors, CZ and Binance, had allegedly wrecked their whole business. And he didn't seem knowledgeable on that. He wasn't very knowledgeable when I listened to him talk at the convention. His main things were the same old thing where he says, regulation. You know what we really need is some regulation in this crypto here, because then we're going to bring in the big money for you guys. And it just doesn't seem to add up, and it happens over and over and over again.
But sadly, if there had been a bit more regulation, he wouldn't have been embroiled in the FTX thing. So maybe he saw it coming, but he just couldn't do anything to stop the freight train of corruption.
I don't agree. It was everything that Sam Bankman-Fried allegedly did was already illegal. There was already regulations. If there's some criminal, they will get around. They just won't follow the regulations. So I don't. That you cannot regulate when something's already regulated. It just someone that's going to break that law is already breaking the law. So I think it comes back down to as Bitcoiners, as people that are in this to look at other solutions, think outside of the square, because the square that we came from is regulation. Now, with all the regulations that banks have, you think they're still corrupt? Do you think they still launder money? Do you think that they still do dodgy deals? Of course they do. We all know they do. Do you think they need bank bailouts? Well, that was in the Genesis block of Bitcoin. The whole point is to think outside the block and to build something on chain, to build stuff that is cypherpunk, and to get away from these centralized exchanges. That's the problem. DeFi, Bitcoin, that's the solution.
The place I'd really like to see some regulation is on the advertising, because over and over again they said FTX is here, and we have all these horrible prescription drug ads here in the US, and they have to say all the side effects and all the ingredients, all this stuff. This FTX commercial comes on, all they have to do is one line at the end where they're like, FTX cryptocurrency company is based in the Bahamas. Instead, they pretended it was a US company. They were meeting with all the US regulators. I thought they were just another Coinbase. I never used them. I never did due diligence of that level. But without that extra piece of information, oh, they're incorporated in the Bahamas, you can trust them. They're just like all the other people that are, tax frauds. It's totally fine. I think there should be more regulation there, but we'll see how that goes. We're running out of time. We just wanted to give a remembrance today to Hal Finney, early Bitcoin pioneer, took the first transaction from Satoshi, volunteered to help out the Bitcoin network, sent early transactions, wrote early posts about Bitcoin on the message boards, had little thought experiments about how much the price could be, and obviously saw right away that having it locked to 21 million units would be a huge boon to the price. A bit of a dreamer, did some code on an early Tron video game that Ben has, did some code on Bitcoin, wrote essays about cryptocurrency before we had cryptocurrency. Just really impressive guy, Hal Finney. It's sad that he passed away early due to ALS. His wife is doing a really neat run competition. He was a runner. It's on Twitter if you want to check out more information about Hal Finney there. Josh, anything you want to say about Hal Finney on the 14th anniversary of the first Bitcoin transaction?
No, rest in peace. And I'm going to go do a run today for him.
Dan, anything you'd like to say?
Just a legend. He put the first, obviously apart from the first transaction, he also, was it in 2004, implemented the first proof of work algorithms of the reusable proof of work based on Adam Back's paper, and put it into action. So he was, really providing the foundational layer of testing foundational layer of Bitcoin, which is proof of work. So what a legend. And also gotta love him, because he said when it wasn't worth anything at all, was like, no, I've done some back of the fag packet calculations, and got to be about $10 million of Bitcoin. So let's just hope it reaches $10 million one day.
An excellent early prediction and a great Bitcoin pioneer, remembering Hal Finney. And now a prediction or a story of the week. Josh Agala, are you ready with a prediction or a story of the week? Go ahead.
Well, no, I'm not ready. But I think it's going to be a good week. I think it's going to be interesting to see what happens with DCG, the Winklevoss. Yeah, it's interesting that through all of this news, the price is going up. So that could be two things, folks. It could be a manipulation of someone trying to cover losses and drive prices up, or it could be actually that there's no weak hands left. That's my prediction, which isn't really a prediction.
What a story, these Winklevoss. If they made all the money with Facebook, lost it, made all the money with Bitcoin, lost it again. What a story it'll be. And I'm sure they're fine. I'm sure personally they're fine. But what an interesting story. What an amazing story. Dan, Eve, prediction or story of the week? Go ahead.
I reckon that Silbert and the Winklevoss will settle their little dispute over a mud wrestling match held at the SEC.
Oh boy. And the Twins could wrestle against Barry. It would be 2-on-1. That's fair. It's only fair because they're twins, right? It's right in there.
Maybe like half of them is strapped together, so they can only use like one arm and one leg each, and one head as well. So it would be a very powerful headbutt, of course, with the two of them, the striking force. But who knows?
They're very fit. They were rowers in the Facebook movie. It's all we know about them is from the Facebook movie. So.
Rowers and they're rowers over it as well. They were
rowers, and more. Thanks again to everybody for joining us today. Be sure to give us a thumbs up down below and subscribe if it's your first time here. Send us a comment, say hello to the chat, and that's about it. Until next time, bye.